Welcome again. This is Emmanuel Eisen coming to you with another edition of Financial Breakthrough Academy. We want to continue where we left yesterday. We started on what I call the Tax Cuts and Jobs Act overview. We worked on the first part of it, and we want to continue today. So let's get started. We obviously want to be able to educate ourselves on this program to provide content that helps us to be able to understand various financial concepts. Again, the content on this program is not to be taken for tax advice. It is always necessary to sit down with a CPA, a tax professional, whenever you're doing taxes or any kind of financial planning, to sit down with a professional to be able to analyze your personal situation so they can be able to craft a solution that works best for you. So, with that said, I want us to move on with our second portion, second part of the Tax Cut and Job Act, an overview of this new law that is in place. This is the second part of the quick overview that we are providing. And let us look at a scripture version today as we embark on this session. In Matthew 22, verse 17 down, we are told there, I believe it goes more than verse 18 per the screen here. However, it talks that Jesus responding to a very important question. Let me read it out. It says, "Tell us therefore, what do you think? Is it lawful to pay taxes to Caesar or not?" But Jesus perceived their wickedness and said, "Why do you test me, you hypocrites? Show me the tax money." So they brought him a denarius. From verse 20 going, it says that, "And he said to them, Whose image and inscription is this?" They said to him, "Caesar's." And he said to them, "Render therefore to Caesar the things that are Caesar's, and to God the things that are God." So we see here from Jesus' response on this interesting dialogue that he's not opposed to taxes as we know it. We will all, some way, somehow, be dealing with taxes of a kind. The goal here is not necessarily to avoid paying taxes. Your goal is to be able to minimize your tax responsibility based on where your personal financial goal is. You that strategy is to help you minimize the obligation you have, not necessarily avoiding it. No one can avoid it. It is part of our responsibility as believers to honor and to contribute to the development of community by paying the taxes. So with that said, let us look at some important information as we go through this. I want to do a quick overview. I mentioned that there are two parts to this. There is the tax reform that impact individuals, and there is the one that impact businesses. So there are two main portions or sections to this. Our last version of this training and education, we tackle the portion that deals with individuals, the part one. So if you want to catch up, you can go back and search for the part one of this where we went into details. I will just go a quick overview of what we discussed in the first part of this teaching here. So what is the review here when it comes to tax reform impact on individuals? We discussed the fact that there are three main aspects to the changes that is happening or has happened already. There are changes to the tax bracket, changes in the deductions, there are changes in the tax credit. So these forms the three main areas of changes. I mean, there are several others that has occurred, but for the most part, most individuals will be impacted by these particular changes in the Tax Cuts and Jobs Act. So we discussed the fact that these are the current tax bracket, income tax bracket that we have, ranging from 10% all the way to 37%, formally from 10% all the way to 39.6%. So I wouldn't go much in detail for this overview, but just so you know, depending on which bracket your income is, it will dictate what ordinary income tax you will be having to be responsible for when you are filing your taxes. Okay, so that is in terms of the income tax bracket changes. Now, next, we mentioned that there is a capital gain tax bracket as well that we want to perhaps be aware of. Capital gains particularly addresses gains from investments and other capital, I would say, businesses. Some people may have stocks or investment in 401ks or other type of investment that may appreciate over time. So that appreciation may be subject to some kind of a gain, depending on what underlying investment there is. So it all depends. Most of us who are just contributing to 401ks may be just subject to our income tax, but if you have other type of investments in stocks and other businesses, you may be subject to some kind of a capital gain from that partnership you have, or stocks, or investment, or some kind of securities you may have. So that's the bracket in terms of capital tax gain that has also changed. We mentioned that henceforth there are no more concept of exemptions as we know it. So no more exemptions. Exemptions have literally to be taken off the table, and because of the changes in the deductions we have, the standard deductions, it pretty much compensates for the exemptions not being available anymore. So we mentioned that in terms of deductions, the standard deductions have now changed. For married couples, the standard deductions come now to $24,000. Head of household standard deduction is about $18,000, and then a singles, the standard deduction is now at $12,000. And we mentioned in terms of itemized deduction, we have some caps for mortgage interest on debt, that is for acquisitions. No more home equity loan line of credit mortgage interest qualifying for deduction. The cap is now at $750,000. Charitable gifts capped at 60% of our adjusted gross income, and the state and local property taxes also now capped at $10,000. So these were some particular ideas that have is necessary for us to note. And with that, we want to jump into the area that impacts businesses. And we mentioned the 199A deduction for pass-through entities is what is perhaps the most significant change for business owners. So let's do a quick run through with the impact of the tax reform on businesses. What is the impact on businesses as we know it? So the first important impact that you may want to know, if you are a business owner, this is something that you may want to pay particular attention to going forward. There is now what we call the 199A deduction for pass-through businesses. So basically, there are two paths to this change. There's what is called a QBI, or the qualified business income. What that basically means is a portion of the income that a business owner has may be deemed a qualified business income, and we'll come to it in a minute what exactly that means. But basically, there is that particular description or category that is out there in terms of the income for business owners, and it said that pretty much two type of income that qualify to be what we call the deductions with limitations, whether by the W-2 income paid by businesses or the asset depreciation of business properties. There are two limitations that impact the qualified business income category. The second aspect of this is what we call the STOB, basically meaning a specified trade of business. Businesses are now described as having something called a specified trade of business. Actually, it's an article on Forbes by one Kelly Phillips that said that the STOB, or a specified trade of business, a business that is described as being a specified trade of business, is basically any trade of business where the principal asset of such trade of business is the reputation or skill of one or more of its employees or owners. So, people who are in some professional services, consulting services, legal accountants and stuff like that may have that kind of description or categorization. So these are two important elements that will impact whether a business can have the pass-through deduction for the tax deduction for taxation purposes. So you want to be able to figure out, you sit down with your CPA or your accountant or whoever is dealing with your taxes to help you navigate when you come to preparing your taxes. You may not have to go to all details, but at least you have an understanding of what this is all about. You may not be totally out of the loop. Now, the detail here to note is this. Basically, what the law is saying is that for the qualified business income, there is now what is called a 20% deduction. Okay, for qualified business income, we've just described in the last slide what a qualified business income may mean. Okay, and there is what we call a 20% deduction. In other words, whatever the business income is, if it's a qualified business income and it also deemed to be a stock, okay, then 20% of that income of the QBI is exempted from taxation. So that is how to look at it. Okay, so qualified business income again is defined as income you get for what you personally do. Okay, whatever income you get for what you personally do comes into that category. Doctors, lawyers, realtors, again, CPAs, providers, financial advisors like us, we all, are in that category. But there's a particular note. I believe architects and engineers are specifically excluded from this QBI categorization. So it's important to know, if you're a business owner, you have somebody who is in business, or you're a minister and somebody in your church is in business, they may want to review what kind of category that they fall into and how it impacts them when it comes to their tax responsibility going forward. It's fairly a good thing for most businesses, and hopefully it translates to more savings on their side in terms of their tax liability, and therefore more money in your hands to save, to invest, to put back in your business, to help grow your business and advance your personal agenda when it comes to business. So that is pretty much the most important and key element or change that has occurred for the tax law that relates to business owners particularly. It is the pass-through deduction, the QBI, we call it qualified business income, that is now 20%, that enables business owners to write off that portion before their income is subject to any kind of tax liability there. So that is something to note. Now, there is what we call the phase out, the stop, threshold, or phase out. For married couple, the phase out is threshold of phase out is at $315,000 or $415,000 for a phase out. For singles, the threshold is the $157,000 and a phase out at $217,500. So we don't have want to go into details, and perhaps another time we do an actual case study to illustrate that. But you want to just think through it as a business owner. How does this impact your bottom line? How does it impact your financial planning? How does it impact your retirement planning and some other planning that you may need to do for your business? I believe that it's important to have an idea, have an understanding, so you can make the necessary changes or preparation towards dealing with what your tax responsibility will be at the end of the year going forward. So the key takeaway here is I believe that every business owner or every professional or even individual should consider sitting down with a professional to evaluate how these changes may apply to your unique situation. We don't want to wait till the end of the year when the time is already spent to be able to figure out how the change is going to impact me. It's a good idea to sit down now with a professional to be able to have an idea how these changes may apply to you. How does it impact your business? How does it impact your financial planning, your portfolio? How does it impact your overall financial planning so you can make the best out of the changes that is happening now or has taken effect? So at the end of the day, you may not be in a place whereby the changes have been implemented, but you didn't take full advantage of it because perhaps you didn't know what exactly to do or how it impacts your business or your family as an individual. So that is basically what the takeaway is. Again, I believe the takeaway is to sit down with a professional to evaluate how these changes may apply to your unique situation. And if you need help in terms of implementing any of these ideas or starting to think through how these changes may apply to you, we can help. Here are some resources if you want to study up a little bit more on the changes. You can visit any of these websites to get some more information at your leisure. Read and get a snapshot, an idea of how these changes are taking place. We also are available to be able to help in explaining or doing some financial modeling. Okay, if you need us to do some financial modeling, we can model how the changes may impact your business, may impact your finance, may impact some of your other goals, either as an individual or as a family or as a business owner or partnership. Give us a call, 720-588-9717, or go online to licensconsultant.com/financial planning, and we can be able to start a process with you. We also are open all the time to visit with community leaders, community associations, churches to provide education on diverse subjects, including the changes that has occurred on the tax law, if that's something that's suitable to your community and the people that you serve. We believe that financial education is very, very key to help us enable us to position ourselves for the financial breakthrough that we all desire. And we have put upon ourselves to provide education. So that's all that we have for today. Again, just a quick overview of the changes that is taking place with the new Tax Cuts and Jobs Act. And two versions or portions and overview I've done first we did last time and today as well. You can take a look at them. Call us if you have any questions. Be happy to go through again with you. Well, this has been Emmanuel Lyson, your financial educator here, coming to you for another edition of Financial Breakthrough Academy. Enjoy the rest of your day, and we'll be back very soon. Be blessed.